Thank you so much for attending my PowerPoint presentation on the unwritten rules of Wall Street bets. In today's video, we are going to go over 36 unspoken laws that run the degenerate pit that is WSB, starting with number 1. Talk is cheap. On a forum built entirely on high-risk options and dangerous financial plays, your word is worth absolutely nothing. If you are going to brag about a legendary win or a catastrophic loss, you must prove it. Show the receipts. Post the screenshot. If you do not back up your claim with hard proof, you get kicked out of the community immediately. Nobody respects pretend money. There is no official rule banning paper trading, and we have even hosted competitions for it in the past. But simulated victories get zero respect here. If you are not risking actual cash, your opinion is completely invalid. The ultimate coping mechanism. When your portfolio is bleeding out, you simply refuse to hit the sell button. That massive loss stays completely unrealized on paper. As long as you hold the asset, hope stays alive. It is a delusion, but it is a delusion that keeps you from admitting defeat. But when that delusion finally shatters, you do not hide. You post the damage. Screenshots of massive financial ruin from highly speculative options trades are the lifeblood of the board. We call it loss porn. We do not offer sympathy. We do not offer advice. We celebrate the destruction. Surviving a market crash requires a grip of steel, diamond hands. This is the extreme tolerance for risk, the stubborn refusal to sell even when a stock is in a freefall. You ride the wild fluctuations all the way up to massive gains, or you ride them straight down to absolute zero. On the opposite end of the spectrum are the weak-willed, paper hands. Anyone who panic sells at the first sign of a market dip gets relentlessly shamed. If you fold under pressure, you get mocked. There is no room for cowardice when the market gets hot. To escape the coward label, some traders choose the ultimate gamble, going full YOLO. You dump your entire account balance into a single speculative options play, one bet, total financial ruin or legendary wealth. It is reckless, fast, and completely irresponsible. Risk your life savings, but keep your opinions quiet. Political allegiances on the board are highly volatile and unstable. We do not care about campaigns or candidates. We care about the charts, leave the baggage at the door, and focus on the price action. Despite the unstable politics, there is a strange collective unity. Apes together strong. This slogan, pulled straight from a movie meme, represents the power of retail traders acting as a pack. To prove that solidarity, members actually donated hundreds of thousands of dollars to a guerrilla conservation charity. We are strong when we move as a herd. That solidarity is built on weaponized self-deprecation. The community survives on profane, biting humor designed to keep everyone humble. We wear insults like armor, routinely calling ourselves degenerates or apes to build a shared identity. If you cannot laugh at your own financial destruction, the comment section will eat you alive. All that self-deprecation serves one ultimate goal. Tendies. It is the slang for the profits made on successful trades, short for chicken tenders. The term became such a massive cultural phenomenon that major fast food chains like Popeyes actually ran promotional tie-ins to celebrate our market success. To get those tendies, you have to abandon traditional finance. Safe portfolios and risk management are completely ignored in favor of highly leveraged options. We bypass every safety net to chase rapid wealth. It is not investing. It is high-stakes gambling. And when the gamble goes bad, you have to know when to walk away. There is no official rule written on the sidebar, but trying to average down on a failing trade is a death sentence. We have documented countless traders who suffered catastrophic losses by throwing more money at a sinking ship. It just sinks you faster. Traditional math does not apply here. Internet culture drives the market. Meme stocks defy normal financial metrics, fueled entirely by online hype. We turn internet jokes into raw financial power, driving stock prices to the moon and completely wrecking institutional short sellers in the process. When traditional advice fails, you look for a reliable counterindicator. The inverse Kramer rule is simple. You watch mainstream financial hosts, listen to their recommendations, and do the exact opposite. If they tell you to buy, you sell immediately. It is a strategy built on the absolute certainty that traditional media is always wrong. If you survive the market, you still have to face your family. This running joke is the ultimate badge of honor on the board. When you make an incredibly risky options bet you claim your wife's boyfriend approves, it is the perfect self-deprecating shield against your own terrible financial decisions. For the absolute peak of speculative trading, we hunt the ultimate high-risk thrill, zero DTE options. Options that expire the exact same day they are traded. These positions move with violent speed, offering massive, life-changing gains or total financial ruin in a matter of hours. If you want to keep tracking the most chaotic trading cultures on the internet, hit that subscribe button right now. We break down the wildest market moves every single week. Directly alongside those same-day options sits another highly speculative favorite: buying ultra-cheap, highly volatile options that are far out of the money. It is a bet that is almost guaranteed to expire completely worthless, but the cheap price makes the gamble too tempting to resist. Sometimes winning early is the worst thing that can happen to you. Your very first options trade is a massive success, giving you a dangerous, false sense of confidence. It tricks you into betting even larger sums of money, setting you up for a spectacular, inevitable crash. Despite the absolute chaos, the community still tries to maintain a shred of self-defense. When a stock is artificially hyped up with zero fundamental backing, we call out the obvious pump. It is a rare moment of collective sanity in a sea of highly speculative bets. When those speculative bets fail and your portfolio hits zero, we have a very specific retirement plan waiting for you. It is the ultimate running joke on the board. If you wipe out your entire life savings, your next shift starts behind the Wendy's dumpster. It is the unofficial mascot of financial ruin. And if you try to explain yourself after that ruin with a long academic lecture about market mechanics, expect to hear one specific phrase: "Sir, this is a Wendy's." It is our favorite way to remind you that nobody came here for a lecture. We are here to gamble, not read your thesis. Traditional finance tells you to buy low and sell high, but we embrace the exact opposite. Buying high and selling low is our ultimate trading loop. You buy into a stock at the absolute peak of its online hype, watch it crash, and panic sell at the very bottom. It is a flawless way to lose money. When regulators, critics, or mainstream analysts demand to know why retail traders are piling into a highly volatile asset, we offer one simple response: I just like the stock. It avoids any complicated financial justification and asserts your absolute freedom to buy whatever you want. It is the perfect defense against Wall Street scrutiny. Nobody is pretending this is a standard investment forum. We openly treat the stock market like a giant casino. Slow, long-term compound growth is ignored in favor of massive bets and fast-paced thrills. It is about the adrenaline of the gamble, pure and simple. But even inside the casino, the crowd can get too loud. When everyone on the board is absolutely convinced a stock is going to the moon, the smartest play is often to do the exact opposite. Inversing the sub's consensus relies on the cold, hard truth that the crowd is usually wrong at the peak of the hype. Protecting your downside is a fundamental rule of investing, which is exactly why we completely reject it. Setting a stop loss is viewed as a sign of cowardice. If you are not willing to ride your options all the way to absolute zero, you do not belong on the board. To prove your commitment, you have to go beyond normal limits. Betting your entire life savings on a single speculative play is the ultimate demonstration of faith. It is a high-risk move that either changes your life forever or ruins you in a single trading session. And when that bet goes completely wrong, it is never your fault. Blaming the market makers and institutional forces for manipulating the price is our default defense. It is far easier to blame a shadow conspiracy than to admit your own options play was terrible. When a stock is in a violent freefall, traditional wisdom tells you to get out of the way. On this board, we treat it like a sport. Catching the falling knife is the dangerous game of trying to buy at the exact bottom of a massive drop. It is highly volatile, incredibly risky, and usually ends with a sliced portfolio. But if you slice your portfolio thin enough, you can always look on the bright side. We joke about turning our devastating trading losses into lifetime tax write-offs to offset future income. It is the ultimate desperate silver lining for a completely ruined brokerage account. If you want to talk about safe, long-term compound interest, go somewhere else. Safe, slow index funds are laughed out of the room. They do not fit our high-stakes gambling spirit. We are here for wild swings and fast money, not steady, boring growth. Even when you do win, you have to be careful. The screenshot curse is a deeply feared superstition on the board. The exact moment you take a screenshot of your massive gains to show off, the market will immediately reverse. Boasting about your profits usually means they are about to disappear forever. When you do lose everything on a bad options play, you did not actually fail. You just paid your market tuition. This is our favorite way of reframing devastating losses as the necessary cost of learning how the game is played. It is a very painful, very expensive education. Before the market even opens, the obsession begins. Worshipping overnight futures is a sleepless ritual for the truly dedicated. We spend the late night hours staring at foreign indicators, desperately trying to predict how the next trading day will start. To survive all this chaos, you have to fully accept who you are. We do not pretend to be sophisticated investors. We proudly wear the degenerate label. It is the ultimate unwritten rule that unites everyone on the board, turning a group of reckless gamblers into a community. Thanks for watching, and subscribe.